Happy Monday and welcome back to the Trader Bacon Show. I am your host, Gates Adams, also known as the Forge Trader. Happy December 8th. We're pulling into this final month of the year. Of course, a lot of people have a lot of theories about this month, as they do with a lot of holiday-driven months. So it will be really interesting to see how the course of the next few weeks unfold as we wrap up 2025 and lean heavily into 2026. In the meantime, we are going to continue talking to successful traders and talking about what's working for them, what has worked for them, and what it looks like on the other side. I want to first and foremost apologize. I keep teasing that we are going to be doing another episode of the Forge Trader podcast soon. I promise we are. There have been absolutely some unexpected circumstances that have sort of derailed my schedule quite a bit over the course of the last few weeks. As you can see, I'm in a different background today. I'll be in a different background again next week as some of these things start to unfold, as I start to get a little bit more steady in where I am, which is a big part of my focus on the time and energy to get those next episodes out. So I may do an episode this week that's just me. Hopefully, shortly thereafter, I will have the follow-up to the Alon episode where we're talking about statistics. I'm not teasing you, John. I promise you it's coming soon. I just don't know exactly when soon means, but I'm getting there. All of that said, just make sure you're following me at The Forge Trader pretty much everywhere, and I'll keep you guys posted on everything that's going on. Also want to, of course, let you know we are going to be giving away 3 evaluations from Apex Trader Funding during the course of this show. So make sure to fill out the form. You'll see it right there in the chat. And of course, want to congratulate last week's winners. We'll hopefully have those open in just a second. As we work on that, I want to let everybody know this is by far my favorite promo ever. I don't know if I can stress this enough. Yeah, everybody likes those cheap evals. I like those cheap activations. So right now, 60% off any evaluation. $6 lifetime activation, all in any size, I think is like $84 and change. So take full advantage of that. Go to apextraderfunding.com and use promo code Benzinga. You can also click the QR code in the top right corner of your screen, and that will get you there as well. All of that said, as we wrap up 2025, we're going to talk today to Ian. Ian is going to share with us some of the insights that he has, being a long-term trader, also a recently funded trader with Apex Trader Funding, and obviously a paid trader as well. So without any further ado, let's welcome Ian on today's episode of the Trader Bacon Show. Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now. Ian, good morning, man. How are you?
Well, good afternoon, I should say, but good morning to you. I'm well. I'm excited, and thank you for such a warm introduction. I almost feel flattered, but there we are.
Well, we're super excited to have you here. Of course, you and I got a chance to catch up a little bit before we scheduled you for the show. And one of the things that I really look for when I'm bringing somebody on is just that ability to just have the conversation flow. 0% challenge with that with you. I'm looking forward to getting a lot of insight from you and a lot of stories from your experience as a trader. But let's kind of take that step back just a little bit and let's talk about the early days. How did you actually get into trading in the first place?
Well, actually, I was an accountant, and I was I couldn't get a job when I was coming out of university. I did mathematics, and I went and I was auditing a company called Eden F. Mann, which was a big sugar trading company, and they had companies all around the world. And they sent me, because of my accounting background, they sent me as a risk analyzer, all about risk. So they sent me everywhere, and I lived in 10 different countries, and we'd have a lot of money in one particular country, and I'd report back to the CEO saying, should we have this amount of money in this country, and what's the return doing with it? And so I was treated like a king because I went to all these different countries, and I was the guy to whether I was going to pull the money or not, and it really was eye-opening. So risk analysis was my main thing, and then I got into trading, and I traded sugar, but nothing like this. I mean, we used to trade and hedge on the futures market, and that was all open outcry. I mean, it was, you'd put in your orders, and if you bought sugar, you sold it, and then you sold on a differential. And I won't go into that, but it's just cash trading. And so we'd have a boatload of sugar, and we'd ship it to a customer, and then it would get refined, and so on and so forth. So it's nothing like, I say I was a sugar trader. I traded a soft commodity. This what we're doing here. In fact, I used to take some charts, and we would put on the chart with pencil, and we put the opening and the close every day, and then we'd do a daily chart. That was how we looked at charts.
Right. I remember with my dad back in the 80s, he would get the Wall Street Journal, and we would pull out the paper, and he would show me what to look for, these head and shoulder patterns and things like that. I mean, I was a kid and just, happy to hang out and spend some time with dad. But I remember those days. Sadly, I shouldn't say sadly, but there was just such a different dynamic around trading those days versus what there is now. I mean, you've made this transition over a period of time. What does trading today look like for you in comparison to what it looked like in those early days? I mean, is it just night and day? Is it a completely different beast?
It's completely night and day. I mean, we used to look at fundamentals. And today, fundamentals, have nothing to do with almost anything. I mean, if you say, oh, there's a large sugar crop, you'd think the market would go down, or then it goes up, and vice versa. I mean, although today there is a large sugar crop and the market is depressed. And but I was always a short trader. I always wanted to find a home for my commodity. I didn't want to get stuck with anything. So in my mindset, I was always a short trader. And so, that sort of gave me, it made me survive in many ways, because I would always sell something before I bought it, and I think, I mean, years ago, people used to make, I mentioned people like Mark Rich and those guys, they would try and corner the market, like the, who was it? The brothers out in Texas who tried to corner the silver market. They would buy everything. Hunt brothers. They tried to do that. I
actually know some of the existing hunts, actually.
They try to, corner the market, push the market up. I mean, that was the idea, But, there's other big traders in the world who shorted the pound, like Mr. Soros and company, and they just saw a fundamental thing, and they took a huge position, made a lot of money, and that is completely not what we do.
Right.
And what I think is what I looked at in this market, I wanted to find something which would work with a prop trading firm, because I'm sort of semi-retired, but I thought this prop trading thing is just amazing, because you can actually trade. Okay, it's fictitious in that sense. It's on sim, but you get to trade. You give these guys some money, and then you get to trade. And if you're good at it, you get to keep some money. And I thought, that's a great deal.
Yeah, I know there's a lot of people, myself included, plus some of the audience, that are pretty pleased with the whole concept. It really has changed the way retail trading works. I know there were prop firms and funding companies that existed, 5 years ago and beyond. But really, once COVID hit and people started to sort of just take a deeper interest in trading, that prop space just became the standard. And I mean, I remember hearing about some of these companies years and years and years ago, long before Apex ever existed. And then all of a sudden, one day, it just blew up. And like I said, everybody knows now, right? Now, I want to tap into something that you mentioned a few minutes ago, and you said you weren't going to necessarily go deeply into, but I want to dig into this a little bit, because when I learned exactly what futures markets were and what they existed for, it really changed the way that I operated and looked at trading. So you mentioned that you were hedging your positions in the futures market. Will you just give a nutshell, you'll do it better than I can for sure. Will you give us a nutshell explanation of how that works and why the futures markets are the market for that?
Well, it's really, it's sort of, what we would trade is, it's a four-pronged approach, essentially. So you would have, you'd have somebody who wants to, produce sugar, and they want to sell you the raw sugar, and we'd buy it semi-refined in a raw form on a boat, usually Brazil or Thailand or somewhere like that. And then, and there are positions on the market, just like there are positions on the ES. And the sugar market would trade, March, May, July, and then September, December. And we would, then we would find a buyer, people like Hershey, or people like, Pillsbury or any of the big companies, people that use sugar, and they have a requirement for sugar, so they want to buy at certain times, and the other guys want to sell at certain times. And
Right.
people that manufacture stuff, they manufacture monthly, whereas farmers would produce at a certain time. The crop gets harvested over 4 months, so we would basically hedge a crop. So the farmer would say, I want to sell at this level, and so we would buy it at that level, but then we'd sell on the market, and that would give us a differential. So if you sell it, and that differential is what you trade, and then when you unwind the hedge, you sell at a price, and then you buy back the hedge. And it's just a bit like, it's like anything. You're buying something and selling something at a margin, a very small margin, by the way, but you hedge it using the market so that you're always square, and the difference is the differential.
So when you make a decision on price months before you actually get the product, you can protect that price. Is that a pretty decent way of saying that?
Yes, it's a hedge essentially. And the only thing that can go against you is the differential. And you might say, well, what is the differential? Well, the differential basically is, the price at which the buyer or the seller, compared to what the market is, would like to sell or buy. And essentially, if the market's at 100, and you might say, well, what does that mean? Well, the seller wants to sell it at 100. Well, he sells it at 100, and you buy it at 100. But as the market changes, there's a differential which allows us as traders to trade a bit like a margin on a what do you call it, a commission basis, and we would trade that differential. And there's finance involved. So if you hold $100 in 1 month, it's going to be, depending on what the interest rate was. And, in commodities at that time, interest rates were like 15, 16%. So it would be worth $102 the next month. And so there's interest calculations, and there's the simple fact that if you've got a lot of money, you can go and buy the product, and you can actually then ship it. And so it was really for large institutional traders in that sense. So it's really moving money around, buying a commodity, making sure you understand the commodity and hedging it, and so on and so forth.
Perfect. And again, I wanted you to bring that out because when this was explained to me, all of a sudden it just sort of, some things just sort of clicked for me. And, it didn't necessarily change the way that I traded, but it certainly changed the way that I looked at the markets. And I think that was very helpful for me. So hopefully that was helpful to some of you guys in the audience. Well, let's talk a little bit about strategy. And ultimately, when you of course made the transition, you're now trading futures as a funded trader, as a prop firm trader. Let's talk a little bit about what that strategy looks like. Let's go ahead and pull up the charts and let's see what this actually looks like for you based on the experience that you have and how it's sort of translated over time.
Well, interestingly enough, my approach is simplicity. I don't trade news at all.
Okay, good call.
Not interested. I don't, obviously I watch out when the red folder comes, or an orange folder, and I do have financial juice on the side, looking if there's going to be a tweet from somebody who might be mentioned, and that can affect the market. But by and large, I'm not interested. I'm just interested in price action. So, I mean, look at the market today. I mean, I think everyone would say that this is a trending downward market. And as you can see, I've drawn a trend line right there. And I'm just going to look at my screen. So I'm not going to look at you, but I'm going to look at my screen. And so, I look at things called double tops. And usually after a large double top, like we've seen right here, the market will generally go down. And I also set on my ES, I'm on ES December contract, I have a 15-minute interval. And so whatever the market does between 9:30 and 9:45, I basically set those blue lines. And that's my range. And that's a really interesting range, because if that market goes out of that range, it usually keeps going, or it goes as a false break and comes back in the range. And then if it goes back in the range, it usually goes all the way to the top of the range. It might do another false break and then come back in the range or go out of the range. And then I have set trades. So I have basically trend line trades. I usually look for 1 or 2 points, and then I'll go short sort of here. Although, as you can see, this did not make the market, did not make the trend line. And I have certain parameters. I'm using Keltner channels here, and I have a mid band, and I have an 80 SMA, which is simple moving average. And so, for instance, if I was to look at today where the market was trading right now, I would say to myself, this market is going down, and I always trade on pullbacks.
Right.
So what I'll do is see the 15-minute range here, and I call this sort of like an easy money trade. I basically, if I look at the reason why I didn't trade, I would go short right here. I did not go short right here because I want the mid band to go below this pivot. It goes below that pivot right now. Like for instance here, this would be a good trade, but then we started talking. I would have probably traded that one, but because it's a big V shape, that kind of makes me a little bit worried because I think it might blow right through, and which it did. And then what happens usually in a downward trend, the market comes down, it retraces back, and then it goes back down, which is what we call a REM trade. And that basically means that the indicators cross and they cross back down again. And then right as we were talking, I probably would have taken that trade. Now, what does it mean? What trade do I do? I'm looking for 2 points, 8 ticks. That's all I'm looking for. And so what I'll do is I will look at, this is my profit calculator. I'll make that trade right there. I'll look at my, I'll do an 8 by 1 or a contract because my volatility is 8 by 8, and I hit that trade right there, and that boom, and I've got 20 PA accounts, and I'll make $100 per contract, and I've got 6 300,000 accounts. I've got 6 100,000 accounts, which could be 12, and I got 4 50s, and so I've got a ratio on those different ones. I divide my drawdown by $700, which allows me to lose at least 7 times in a row.
Right. And
that's
I think
key.
it's interesting that you bring that up because your history is risk management.
That's it. Yeah.
I mean, is that like how calculated is that? How statistically fundamental is that?
I think it's key. I think you've got to trade. I think you've got to trade the drawdown. Yeah. What you've got to do is you've got to practice on the sim, get yourself to 70%, because that's you're not going to get any better than that. You might get to 80 and you'll go to 65, but you'll get to 70 on average. And you've got to say to yourself, out of 10 trades, net 4, I'm good.
Yeah.
That's it.
It's beautiful. You know? And you're 1-to-1, so it eliminates any sort of extra math. Makes life easy.
I might do a stack, and a stack would be right here. So for instance, look at here. So what I would do, although it's a double bottom, I don't like double bottoms because double bottoms means it's probably going to blow right through. So I wouldn't have taken this trade. But if this was just a clean pullback, what I would have done is I would have done a stack. And a stack is a 2-to-1 ratio. So I bring this down to here, and I put this here, and I say to myself, okay, I would then, and that would be 8 and 16, I would put a trade. Now, if I'd done this stack, which I wouldn't because it's a double bottom, it would have blown my account. Wouldn't have blown my, well, it would have blown my account if on an 8 by 8. So I would put in a short at the mid band with 1 contract and another short in the mid band with 2 contracts. And then I would wait for it to pull back, and then I would then move my my take profit probably halfway and make some money. So it's a bit like it's almost a martingale a little bit. You're basically doubling up as it goes against you. Usually what happens, it hits the mid band and drops. And so I've really got essentially 5 trades. I trade using the mid band, I trade using the Eddy SMA, and I trade using the trend lines. And so what usually happens in any market, a market trends, and then it goes sideways, and then it either trends back up again or it trends back down again, and then it goes sideways. Right. It either goes up, down, or sideways. And so in a sideways trend, you wait until it gets out of that range. When it gets out of that range, you wait for the mid band to come in, and then you go long. And that's basically what I do. And I've got right now a 70% win rate. And the other thing which, and this is all done by an amazing mentor, which I had. And his name is Helbert Rees. He's amazing. And I don't know if I can shout out to him, but he really is. Shout out. Trader's Blueprint. And I recommend the guy. I mean, the guy, but I think what a lot of people, they say, oh, well, go to this guy and he'll tell you what to do. And people, they don't put the work in. Right. You have got to put the work in. And what do I mean by that? It's very easy for me to say that, but you've got to see the market. And this market, so for instance, those trades that I talked to you about, they work in some particular markets, and they're like the trend line will work, the reversal will work, the continuation will work, they will work, And then in other markets, you've got to wait until they come back in again. So you've got to know the different types of markets and the different volatilities. So and you've got to know the difference is what we call nuance. And how do you get nuance? You get nuance by putting the hours in. So I put my hours in. I can read this market to the point where I'm net 4 right. Okay. And sometimes I'm a lot better, and sometimes I also improve my risk reward by sometimes I'll rotate accounts. I'll say, you know what? I've really got several criteria. I've got a gold trade, a silver trade, and a bronze trade. What's that mean? If it's a really gold trade, then I'll put 3 contracts on. If it's a bronze trade, I'll put 1 contract on.
Right.
How I feel. And what I need is, and you might say, well, what's the difference? Well, it's confluence. I've got to see confluence. If you look at this market, isn't it amazing that you see a head and shoulders, and then you'll see like right here, how this shoulder right here, it hit the mid band right there at the shoulder and then came down. So there's a lot of confluence that you've got to look at. And the only way that you can get good at that is just by watching the market and studying it and getting good at it. And I think the biggest mistake that traders do is the reason why people get into trading because they want to make money. They think it's quick and they think it's easy. And they fail because they want to make it too quick and they don't want to spend the time. They don't want to spend 6 months on a simulator. They don't want to do it. They just don't want to do it. And what Apex is extraordinary. I mean, I don't know how I guess they came up with the rules and regulations because, it's not ironic. It's realistic that the only way you can become a successful trader is if you do trade and you become successful, at least 7 times out of 10. The fact that you have to trade every day and then you've got 8 days, that forces you to become a good trader, and it forces you not to overtrade, and it forces you to say, you know what, I'll do maybe 1, maybe 2. And what I'll do if I have 2 successful trades, sometimes 3 if I really like it, then I'll trade on sim for the rest of the day. Yeah. And I'll just build myself up. And so I think those are, there's the technical aspects to trading, understanding, how to read a particular market. It doesn't matter what it is. I have to trade the ES and it's very, very simple. And as you see, my chart's very simple. I don't have blue and red candles. I just want to see price action. And you see what's happening here. What has this market done? It's gone down. Guess what it's doing right now? Had a double bottom. It's trading sideways. Now you see that's a 5-day low. This red band right here, this red bar. So what it's got to do now, I won't do anything until it's got to either come back in the range or it's got to go below here and then I'll trade again. Right. Got to get below here. So it's got to get out of the range and show a direction. Now I do trade reversals if it looks good, and I might trade a double top if it looks good. And it depends on the market. And sometimes I see the market and I hit it and it works fantastic. And sometimes I see the market and I go, you know what? I just can't see it. And I'll do a trade and I'll lose. And I'll go, you know what? I'm out. So discipline is really key. Sometimes to say, you know what? And the other thing I think is really key. I had $24,500 of payouts in October, November, and this month. And Apex paid me. Thank you. And when I've had a few payouts, I don't trade that day. Because I don't want to get euphoric. I don't want to say, I got to say, you know what? It's amazing when you lose, you've got to take a step back. And if I said to you, oh, Gates, you lost today. And he goes, yeah, you know what? I lost today. You know what? And what I'm going to do is I'm not going to trade today. Right. And I go, yeah, that's probably a good idea. But if I said, hey, Gates, you won a bunch of money today. What are you doing? Oh, I'm so excited. I can't wait to get back to that market. And you're not thinking. And I think it's funny you say that. I know you and I have had this conversation, but 2 weeks ago, I got the biggest payout I'd ever gotten by far. Last week, I blew more than I've ever blown in my history of having PAs. I can't fathom that, Gabe. I don't know how I don't understand that. Because you're more disciplined than I am. You come from a deeper background to this, and you're risk management focused, right? It's not that I'm not focused on it. I'm just not that good at it yet. I'm working through it, right? But these are things that you have to develop as a trader. You talked about doing the work.
Nobody's going to achieve success as a trader by luck and watching YouTube videos alone.
No. So. I think, so then you might say, is it all worth it?
Mm-hmm.
You know, and that's a good question. And I think that I remember I was with this mentor, Helbert, and at one time I said to him, you know, Helbert, I said, I just want you to know I'm working really, really hard at this. And when I say hard, I'm working 8 hours a day. I do my meditation. I'm exercising. I read my book, which I love, Atomic Habits by James Clear.
Love it.
Just a great book.
Phenomenal.
And I said, I'm doing everything right, but I'm losing. So why is that? And I'm not questioning your ability, is what I say. He said, because you're not good enough.
Right.
And, you know, that's a great thing to say to somebody. Why are you not good at, why are you not making money? It's because you're not good enough.
You said that to me as an example, not directly at me, but you said that to me before when we were preparing for the show. And I have to tell you, since that day, that has been rattling around in my head, and it hit pretty hard. But,
oh, really?
But it's right. And it's not a popular opinion by any stretch of the imagination, but it's right. I want to clear up a little bit on the chat here. James Clear is the guy who wrote Atomic Habits. And Ian, can you spell Helmut's last name? I know we had a question there. Monica, shoot me. This is a little outside of the scope of the conversation we're having, but feel free to shoot me a DM on any of the socials, and I'll be happy to answer your question.
Ruiz, R-U-I-Z.
Helmut Ruiz. Thank you.
Yeah,
R-U-I-Z.
Day Trader's Blueprint, and I hope he doesn't mind me mentioning it. He's just he's not going to do you a hard sell. He's just going to tell you how to trade, and you've got to do the work. And he does you a 90-day course. And I tell you one thing I found amazing about him. Every time I asked him a question, and every time I showed him an example, he had an answer for me.
Tells you something.
He had an answer for me.
Right. And you can't fake certain things. And I've got a couple people that I work with, and that's one of the things that just stands out is when you see somebody who truly understands, there's no questioning that. You can tell.
And he's humble, and he'll say, he'll tell you that he's blown more PA accounts than you've had hot dinners.
It makes me feel a little better. That's amazing.
And I mean, and he went through it. It took him 4 years. And what he teaches you to do in 90 days. And a lot of people, he said, I've got people that are, what he also said to me, he said, I've trained people that are much better traders at me. And they're not trading.
Yeah. And
I said, why is that? And he goes, well, they expect that, if you put in time, right? Or time is here, and you're supposed to get better. So you're supposed to do this. But no, what happens is you kind of do this, and then you do this. And this is called the Valley of Disappointment,
right? Which
is in the book of James Clear. Right. And then you get to this point of the Valley of Disappointment, and you go, I'm not good enough. I can't do this. And you give up. And, or you dig deep and you say, I think the other thing that people say, if I can't get this done by June of next year, I'm not going to do it. And there might be financial constraints because they save some money and they said, what, otherwise I'm going to go back to work. And I think that is a problem because you cannot put a timeline on when you're going to be good enough to trade this. And you've got to put the work in. And I think, when you're learning something, it doesn't matter whether you're learning to fish or to ski or to get on a skateboard or to surf. I mean, the other, little, anecdote he'll say is, if you're going to go surfing, you're going to get wet.
Right.
Right.
You're going to great expression. And that sounds a lot more fun than skateboarding and getting into the cement. But yeah, absolutely.
And you're going to fall off the surfboard.
Yeah.
And, and after a while, all of a sudden, you're getting good at surfing, and you're thinking, well, how, and you look at surfers, I mean, I think surfing is it's like skiing, but the mountain's moving. I mean, it's an extraordinary thing, isn't it? And how do you get good at it? And the other thing is, if you spent $100,000 a year on some, ology, doesn't matter what it is, at university, and you come out and you don't have a job, well, you could spend, $400,000 and I'm not suggesting you spend $400 on a trading course, but and after 4 years, and you're making 50, 60, $100,000 a month, you probably think that was a good a good return on your money. And
Sure.
and I think you've got to want it. I think that's the other thing. You've got to want this. You've got to want it.
Absolutely.
Because it's something which, and there's the other aspect to it all. I mean, there's the technical. You've got to know the market. You've got to know your way around NinjaTrader. You've got to know your way around a prop firm. Read the rules. How many people buy an account and don't read the rules?
Yeah.
I mean, I read the rules, but I didn't really understand them. I didn't understand about the scaling until you get to your threshold, and then you can use the full accounts. And, I didn't get a payout on that, but I learned.
You learned?
Yeah, I learned. But, then there's the emotional side. And I think that the only way you're going to get around the emotional side is to accept the fact that if you're going to be 70% right, that's acceptable. And if you trade within those parameters, and when you lose, and you can't have more than 5 days in a row of losses. And if you do, it means you're not good enough.
Right.
So
that's it.
I think, and it's easy for me to sit here and say these things, but trust me, I have been through the valley of disappointment. I have been miserable. I've been thinking, gosh, I'm useless at this. And then other people think, oh my God, Ian, you're amazing. You've got a payout. And we're in a Discord channel, and, people think, oh, you're wonderful. And I go, well, I'm not wonderful. I still look at the market and I think, well, what's going to happen? And are you still there? I kind of lost you, but anyway.
Oh, I don't know. Can you guys still hear me? I think my dog unplugged my camera.
And that's okay. You're good. And I think the other thing which I find is really, really interesting is when you place a trade, you've done all the work, and the outcome is random. I love that.
Yeah.
So you look at a trade and you say, okay, the market's going down. This is my setup. I recognize the pattern, and I'm going to enter. And when you enter and you do your trade, then basically the outcome is random, and you accept that. Yeah. And if it goes in your favor, you go, good. And if it goes against you, you kind of go, actually, that was a good trade, and you don't get upset.
That is part of one of the keys that I struggle with, and I know a lot of other traders do. Ian, I could absolutely do this for another half hour, an hour. I could do this for hours.
It's already been half an hour. I've been waffling on ad nauseum, but anyway. Good.
You know what? Absolutely fantastic. And Kyle, I absolutely agree with you. Ian is a legend, most patient and disciplined trader out there. It sounds like he's obviously got some things figured out and is doing well. Ian, you have fans in the chat, so congratulations on that. But absolutely spellbound with some of these stories, and we're going to have to do this again at some point and get a little bit more time. Thank you so much for spending some of your, I'm going to say Monday evening with us. For you, I know it's a little darker out there.
It's time to go to the pub. It's half an hour. It's 4:35 here, but anyway, I'm going out to dinner tonight, as you can see, so I'm ready to go. Beautiful. But thank you so much, and thank you, Apex. You guys are brilliant. And if anyone naysays you, they don't know what they're talking about, and they should go do something else. You guys, and I say that you're not paying me. Well, you are paying me. Thank you. But you're paying me for working very, very, very hard, and I appreciate everything. Listen, Gates, Mr. Adams, thank you, and good luck with everything. And don't blow those PAs. They're hard to get.
No, I'm keeping it clean now. And Marcus, to answer your question, Helmut Ruiz, just take a look at the chat, though both the names are in there. And we will be back again next week. I got to clear this out. Make sure to fill out the form. Get the chance at winning one of the evaluations. Winners from last week: Edward, Bulbul, and Johannes. I hope I pronounced all of those reasonably close. My apologies if I didn't, but you get an evaluation out of the mix anyway. So, and we will be back next week with another guest and another phenomenal show on next week's episode of the Trader Bacon Show. Thanks for joining the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Make sure to join us next time, Mondays at 11 a.m. Eastern.